Ever wondered how smart money quietly builds position before a massive rally? That's exactly what the Wyckoff Accumulation Pattern reveals. The hidden footprints of institutional buying that happen before a market turns bullish. In this video, we will break down each phase step by step, so by the end, you'll know exactly what to look for before the next big move. So in this video, we'll be covering the 8 key features of a Wyckoff Accumulation Pattern. So the Wyckoff Accumulation Pattern shows how markets transition from a downtrend to an uptrend. So it's made out of 8 key stages, from heavy selling pressure to the first signs of strength. Let's walk through each stage and learn how to identify on the chart. So the first key feature is the preliminary support, the second is selling climax, third automatic rally, the fourth secondary test, fifth spring test, sign of strength, followed by the last one, which is the last point of support. So first we have the preliminary support or PS. So after a long downtrend, buyers, often institutional, start stepping in quietly. So you'll notice trading volume increasing and price spreads widening. So this doesn't mean that the bottom is in just yet. It simply shows early buying interest, signaling that the demand is starting to absorb supply. So there are some typical characteristics that you want to pay attention to for preliminary support. So the two things are volume increasing and the price spread widening. So after the preliminary support, we have the selling climax. So this is the emotional low of the market. So panic selling reaches its peak and prices drop sharply, but smart money is buying heavily at this point. So look for long lower wicks, strong rebounds, and a close well above the day's lows. So this point often sets the bottom of the trading range, right? So the selling climax will form the bottom or the lower part of the trading range. The next one is the automatic rally. So after that panic selling ends, right, we get an automatic rally or AR. So the automatic rally is the immediate rally after selling climax, right? So because selling pressure is exhausted, even light buying pushes price up quickly, and shorts start to cover, adding fuel to the rally. So this creates the upper boundary of the trading range or the resistance. So that is for the automatic rally. Then after the automatic rally, we have the secondary test. During a secondary test, prices revisit or slightly dip below the previous low of the selling climax. So this secondary test is to test whether the selling pressure remains. So if volume and volatility are lower this time around, it's a good sign. It means that the supply is drying up. So sometimes you'll see multiple secondary tests before the next stage begins, right? So the next stage is the spring. So the spring usually occurs at the middle to the right side of the trading range. So the spring is a false breakdown where prices dips below the trading range or the selling climax, only to bounce back right above it. So the spring will trap breakout traders and forces them to buy back in, fueling a reversal. So the spring will take prices below the low of the trading range and then reverses to close back within the trading range. So take note for a Wyckoff accumulation pattern, not all springs and terminal shakeouts always occur. But if they do occur, it's a stronger sign or stronger signal that this Wyckoff accumulation pattern is happening. After the spring, the market needs confirmation. So that's where the test and the sign of strength comes in. So a successful test will show shallow pullbacks and higher lows, while the sign of strength is a strong rally with high volume and large bullish candlesticks. So this is all relative, right? So if we take a look at the typical characteristics of a test and the sign of strength, we want to see prices forming higher lows and higher highs, relatively large bullish candlesticks, and on relatively high volume. So what these characteristics indicate to us is that this is where demand clearly dominates supply. So when demand dominates supplies, these are some of the footprints that are evident within the trading range. In this video, we have gone through the 8 key stages of a Wyckoff accumulation pattern. So we'll do a brief recap. So the first part of the Wyckoff accumulation pattern is the preliminary support. So this is where prices start to widen and then volume starts to kick in, right? And then after the preliminary support, we have the selling climax. So the selling climax tends to mark the bottom of the downtrend, and it also forms the bottom part of the trading range. So the selling climax will happen at this point, and then the immediate rally after the selling climax is the automatic rally. So the high of this rally will define the upper boundary or the resistance of the trading range. So as we can see over here, the high of the automatic rally forms the resistance or the upper boundary of the trading range. Then after the AR, we have the ST, which is the secondary test. So the secondary test, we'll see prices either revisit the lows or it might even undercut the selling climax low. So within this trading range, we might see multiple secondary tests. Then after the secondary test, we have the spring. So the spring is technically the lowest point of the trading range, right? So we can see over here, the spring will undercut both the secondary test and the selling climax. So what we want to see in a spring is that prices take out the lows of the trading range and then reverses back up quickly. After the spring, we have the test. During the test, we want to see prices forming higher lows and higher highs. And then after the test, we have the sign of strength. So during the sign of strength, it shows us that, okay, this is the part of the trading range where demand finally dominates supply. So when demand finally dominates supply, it's evident in the price chart. So some of the characteristics we can take a look at during this part of the trading range is prices forming relatively large bullish candlesticks and on relatively high volume. So those are the key stages of a Wyckoff accumulation pattern. So with this, you should be better able to identify Wyckoff accumulation pattern on your price charts. So right now, after going through the theory, let's take a look at the actual price charts and see how this Wyckoff accumulation pattern forms on the markets. Okay, so for the first example that we'll be taking a look at is Ethereum or ETH. So we have the downtrend over here. So let's identify the first key stage of a Wyckoff accumulation pattern, which is the preliminary support. So remember, the typical characteristics of a preliminary support is when prices, in terms of the volatility, price spread widens and also on higher volume, right? So we can take a look over here. So we have some signs that this is the preliminary support. So how do we know, right? So we can see that this was on a relatively larger bearish candlestick. So this is when the price spread widens, right? Over here, but we do not have like much volume. And then we see the volume coming in at the later part over here, right? So this is also on a relatively large bearish candlestick and on relatively high volume, right? So these are some of the key traits or key characteristics that we can identify in a downtrend. So not long after the preliminary support or some of the characteristics of a preliminary support, prices form the bottom over here, right? So this was the selling climax. So why is this the selling climax? So if we zoom out over here, right, the selling climax forms the low or the bottom of the downtrend. So this is the part where prices will no longer go below that point, right? So over here, we can see there are some characteristics of a selling climax. So one of it is the relatively long lower wick. So over here, we have the relatively long lower wick, but over here, we do not see the volume kicking in, right? So over here, we only had the relatively long lower wick. So this forms the selling climax. So the next one is the automatic rally. So the automatic rally is the high of the immediate rally that comes after the selling climax. So the high of the rally was this point over here. So we can identify that this will define the upper boundary of the trading range. So we can draw a line over here, and this is a resistance part of the trading range. So after that, we have subsequent secondary tests. So we have the secondary test over here. And then we can say this is a secondary test. So it's not technically a spring because it did not undercut the lows of the trading range over here. So we can say that this is more of a secondary test rather than a spring. So prices revisit this area before it moves back up. So when it moves back up, take a look at the individual candlestick. What we want to see is the test and the sign of strength. So for the test, we want to see prices forming higher lows and higher highs, right? So over here, after prices form the secondary test, what we see after that is prices making higher lows and higher highs, right? So this is the low, right? Then you can see that subsequent lows are higher than this low over here. So prices are clearly making higher lows. We also can see that prices are making higher highs, right? So these are the highs, right? So you can see that prices are making higher highs as well. And then on top of the higher lows and higher highs, what we want to see is the sign of strength, right? So sign of strength is when it indicates to us that at this part of the trading range, the demand or the buying pressure dominates the supply or the selling pressure. So how does this play out on the price chart? So on the price chart, we want to see prices forming relatively large bullish candlestick and on relatively higher volume. So what we can see over here is that we have relatively large bullish candlesticks, right? So we have one over here, another one over here. right? So you can see that prices are actually forming relatively large bullish candlesticks, and you can see that for this one, the volume was slightly higher than average. So these are some of the signs of strength. Then after that, after prices break above the high or the resistance of the trading range, you can see that prices make a multi-bagger move, right? So from the high of the trading range, right, after it broke out, you can see that prices all the way to the top, prices make a 1,200% increase from there. So that's the power of a long accumulation range and correctly identifying this trading range. So that's for Ethereum. Now let's take a look at another example. So the next example is Pepe, right? So for Pepe, it's slightly different, but the key concepts are there, right? So far in this video, we have been talking about accumulation pattern only, but there's another part of the Wyckoff accumulation pattern, which is in this case a reaccumulation pattern. So how a reaccumulation pattern differs slightly from the accumulation pattern is the reaccumulation pattern starts after a move up. There's a downtrend previously, and then we have the first move up. So that's the difference between a reaccumulation pattern and a normal accumulation pattern. But the key stages within the accumulation pattern remains the same, right? So for the reaccumulation pattern, we have the buying climax over here. So the buying climax will form the upper boundary or the resistance of the trading range. So we draw a line across here. So after the buying climax, we have the automatic rally. So the automatic rally will form the low or the support of the trading range, right? Then if we take a look at the accumulation range, we'll see that there was the spring over here, right? So the spring will undercut the lows of the trading range. So over here, prices undercut the lows of the trading range, but you can see that after prices undercut the lows of the trading range, it quickly went back and traded back within the trading range. And then over here, towards the right side, we see that there are the test and the sign of strength, right? So the test is from when prices form higher lows and higher highs. So right, so if we take a look at the lows over here, prices were clearly making higher lows, and in terms of the highs, prices are making higher highs. Those are the characteristics of a test, right? Then the next one is the sign of strength. So you can see that after that, in terms of the candlesticks or the bullish candlesticks, you can see that those bullish candlesticks are relatively larger than before, right? So over here, we have a relatively larger bullish candlestick. The clearest or the most evident one is over here, right? So we had a massive bullish candlestick over here, and it was on above average volume. So this was a show that the sign of strength was kicking in within this part of the trading range. And you can see that subsequently after that, prices consolidate for a while more before it went on a massive run, right? So if we take a look over here from the breakout to the highs, right? So the highs, prices actually make a 660% increase from the breakout level. So that's also another good example of how a Wyckoff accumulation pattern, or how if we can identify or correctly identify the Wyckoff accumulation pattern, we can potentially reap the benefits of entering into such stock or such coins. So the last example that we'll be taking a look at is Pudgy Penguin, right? So this is also similar to Pepe, whereby it's a reaccumulation pattern, right? So, but similar, we had a downtrend over here, and then we had the first move up, right? So the first move up, this was the buying climax, followed by the automatic rally. And then we also had the spring over here. So the spring undercut the lows of the trading range, right? And then you can see that after that, we had the test, which is when prices form higher lows and higher highs. Then we also had the sign of strength, relatively large bullish candlestick. So over here, we had the relatively large bullish candlestick followed by this one. And then it was all on above average volume. And you can see what happened after that. After prices successfully break out from the Wyckoff accumulation pattern, prices increase quite substantially. So we'll take our price 2 over here. And then if we go up all the way to the highs, prices actually went up by more than 200% within just a short period of time. So it broke out on about the end of June. And then at the high over here, it was the end of July. So within 1 month, prices make a more than a 200% increase. So those are some examples of the Wyckoff accumulation pattern on the actual price chart. So hopefully you have learned something from this Wyckoff accumulation pattern video. I'll see you in the next one.